Hello guys, welcome back to our channel. Today is another video about how to buy and sell stocks for your account. To buy stock, you'll typically need a system of stock broker, since you cannot simply call up a stock exchange and ask to buy stocks directly. When you see a stockbroker, whether a human being or an online platform, you can choose the investments that you wish to buy or sell and how the trade should be handled. In this vein, there are two broad categories of brokers to choose from: a full service broker or an online discount broker. Below, we discuss how you can use these options to trade stocks on your own. We'll also talk about the third option, the direct stock purchase plan, whereby investors can obtain shares directly from certain public companies. Where to buy stocks? Most of the time, stocks are listed and traded on exchanges, licensed venues where buyers and sellers meet, often with the assistance of a broker or other intermediary. These intermediaries will be members of the exchange and use their access to buy and sell shares on your behalf. Major exchanges in the United States include the New York Stock Exchange and Nasdaq Market. Smaller companies with less liquid shares and minimal market caps may alternately trade over the counter on more loosely regulated platforms such as the OTC Pink Sheets. Shares of these companies are often more volatile and risky, so investors choosing to trade on the OTC market should engage in extra due diligence and understand the risks involved. Of buying stocks with a full service broker. Full service brokers are what some people visualize when they think about investing. Well dressed business people sitting in an office chair and chatting with clients. These are the traditional stockbrokers who will take the time to get to know you personally and financially. They will look at factors such as marital status, lifestyle, personality, risk tolerance, age, income, assets, debts, and more. By getting to know as much about you as they can, these full service brokers can then help you develop a long term financial plan. These brokers can not only help you with your investment needs but also provide assistance with estate planning, tax advice, retirement planning, budgeting, and any other type of financial advice. Hence the term full service. They can help you manage all of your financial needs, how long and into the future, and are investors who want everything in one package. In terms of fees, full service brokers are more expensive than discount brokers, but the value of having a professional human investment advisor by your side can be well worth the additional costs. Accounts today can be set up with as little as $1,000. Most people, especially beginners, would fall into this category in terms of the type of broker whom they require. If you want to buy stock online discount brokers, on the other hand, do not provide any investment advice and are basically just order takers. They are much less expensive than full service brokers, since there is typically no office to visit and no certified investment advisors to help you. Cost is usually based on a per transaction basis, and you can typically open an account over the internet with little or no money. Once you have an account with an online broker, you can usually just log onto its website and into your account and be able to buy and sell stocks immediately. Remember that since these types of brokers provide absolutely no investment advice, stock tips, or investment help of any kind, you're on your own to manage your investments. The only assistance that you will usually receive is technical support. Online brokers do offer investment related links, research, and resources that can be useful. If you feel that you are knowledgeable enough to take on the responsibilities of managing your own investments, or if you don't know anything about investing but want to teach yourself, then this is the way to go. The bottom line is that your choice of broker should be based on your individual needs. Full service brokers are great for those who are willing to pay a premium for someone else to look after their finances. Online discount brokers are, on the other hand, are great for people who with little startup money and who would like to take on the risks and rewards of investing upon themselves without any professional assistance. If you want to buy stocks via a direct stock purchase plan, sometimes companies will sponsor a special type of program called Direct Stock Purchase Plan. DSPPs were originally conceived a generation ago as a way for business to let smaller investors buy ownership directly from the company. Participating in a DSPP requires an investor to engage with the company directly instead of with a broker, but every company's system for administering a DSPP is unique. Participating companies will offer their DSPP through transfer agents or another third-party administrator. To learn more about how to participate in a company's DSPP, an investor should contact the company's investor relations department. How to trade once you have a broker. Once you've chosen your brokerage platform, you will need to establish and fund an account before you can begin trading. Today, it's easier than ever to link a bank account online and transfer funds, or to electronically roll over an existing brokerage account to another firm. You can also choose to make recurring deposits into your brokerage account to increase your portfolio on a regular basis. Once funded, you simply need to go online or call your broker to place a trade. Stocks are designated by a unique ticker symbol, a 1 to 4 letter mnemonic assigned to a particular company. MCFT, for instance, is a ticker for Microsoft and C, and AAPL is a ticker for Apple and C. If you don't know the ticker of your stock, it is easy to look up online or via your broker. Uh, when you select the stock ticker that what you like to trade, you'll be met with a price code, a set of information about the stock's price and activity. This will show you the last price at which the shares traded, as well as a bid and an offer. The bid is the lowest price at which somebody in the market will buy a share. The offer or ask is the lowest price at which somebody in the market is willing to sell. The difference between the bid and offer prices is often known as the spread. An narrow spread typically indicates that the market for the stock is quite active and liquid. A wider spread indicates the opposite. After considering the price quote, you may place your order. Market orders are the most basic type of order and will give you immediate execution at the prevailing marketplace. A limit order, on the other hand, allows you to set a specific price at which to buy or sell. If the price never reaches that limit level, then the trade will remain active until it's cancelled. Many such traders are day orders that will remain good until the end of the trading day. If you want the order to be active only briefly, you can instead specify your broker that it's immediate or cancel. Alternately, if you want the order to remain in force for longer than a day, then you can designate it good till cancelled. Other conditions can also be placed on an order, such as stop loss. When your trade is executed, you will receive a summary of your order details. So guys, that's all for now. I hope I helped you with something. My pieces of advice helped you, and see you in the next video. Bye bye.